Good evening, ladies and gentlemen, and a very warm welcome to the 10th SBI Banking and Economics Conclave 2023. Over the last 9 years, this conclave has carved its place as a boiling pot of new ideas by the biggest names and leaders in the industry. This is a platform for innovative thought, game-changing ideas, and open conversation. A story that we've all spent countless hours discussing and understanding is the power of India. In an uncertain global environment, amid war, amid elevated inflation, and even with several economies faltering on growth, India has not only held steady, but it has stood out as a bright spot. Investments continue to pour into India. We continue to seal mega global partnerships, and the massive indigenization push by our government has all been held in place by a solid banking system. In fact, many in attendance here at this conclave today have been the leaders that have supported this phenomenal rise. Today, even as India is growing well, clocking in a 7.7% growth in the first half of this financial year, many economies are still struggling. The environment is still shaky, and the risk of a global slowdown is still very much upon us. In that context, the 10th edition of the SBI Banking and Economics Conclave is centered on the theme of building a resilient brand India amidst global uncertainty. Over this two-day conclave, we will look at a range of interesting and pressing topics, from the trends and insights that will shape India's future to talking about central and mainstream banking. We promise that you will all be engaged. Should you share any part of this conclave on social media, may I request that you please use the hashtag SBI Conclave. And to now set the ball rolling, let me first invite the chief host and the man leading India's largest public sector bank, Mr. Dinesh Khara, Chairman of State Bank of India, for a welcome address.
Thank you very much. Thanks, Pavitra. Good evening, ladies and gentlemen. Distinguished guest, Dr. Vivek Joshi, Secretary DFS, Government of India, Shri VVS Lakshman, ace cricketer, colleague from industry, banking and financial sector, thought leaders, as also members of the media. I welcome you all to the 10th edition of the SBI Banking and Economic Conclave 2023. The SBI Banking and Economic Conclave is the flagship annual event of State Bank of India, a one of its kind in the industry. The conclave has carved a niche place for itself by selecting themes and subjects that are contemporary for the country of our size. The most vibrant democracy that is also leading from the front renaissance of the global south. Our effort is to create a body of knowledge that provides actionable roadmap to contemporary problems facing the country. Therefore, the conclave strives to bring diverse viewpoints of national and international ramifications to deliberate under overarching theme of the conclave of the year. Uncertainties continues to mar the global economic and geopolitical landscape. The country has weathered these headwinds and emerged resilient and all set to regain the lost ground due. Past exogenous shocks, as vindicated by our numbers. The Indian economy has continued exhibiting robust resilience during the current year too. Building upon the momentum initiated during 22-23, notwithstanding the global turmoil as escalating multiple footprints of geopolitical tensions threaten the change, and also it is also impacting the terms of the trade. Despite that, we have got a growth rate which is 7.7% in the first half, the highest among major economies in the world. I remember last year's SBI Banking and Economic Conclave was centered around the theme of role of banks in evolving an uncertain macro environment. The choice was natural because pandemic was brought under control after massive vaccination drive and the economy was gradually opening. Financing the productive sectors of the economy was quite important policy agenda. Against that backdrop, I can humbly vouch that banks have strived to exceed the expectations as financial intermediaries of importance and lubricating the great wheels of the colossal economy on the rise. While creating value for diverse customers, as a bonus, and thanks much to the unwavering policy support and the regulatory jurisprudence, we have seen a decoupling from the mayhem of the major developed markets and the bouts of volatility plaguing various asset classes that greatly undermine investors' confidence in systemic ability. Being almost non-existent in our economy at this end, against this backdrop of failures of large banking institutions globally last year, the relative calmness here signals an unparalleled maturity of the ecosystem that seems a harbinger of good times ahead. Over the last 1 year, the economy has moved from strength to strength. The banking sector has displayed the phenomenal resilience. Banks delivered very good performance in financial year 23, as also in the first half of 24, strengthening capital and other key ratios, gearing up to attain the scale to finance multiple large value projects or supporting the capex and also supporting the ambitious transition to clean green energy and mobility, while also building the huge digital capabilities and forward-looking risk metrics to efficiency, serve a large consumption-centric young population. The twin balance sheet advantage seems truly the new normal for underpinning the holistic economic growth that permeates horizons not seen before. Last year's conclave was designed keeping in mind Honorable Prime Minister's vision of Amrit Kal. The goal of Amrit Kal over the next 24 years is to create an India where the level of development is bridging the gap between the villages and the cities. In 2023, we have another chapter to celebrate. This year's conclave is in the backdrop of India's presidency at G20. India's G20 presidency emphasized on the manifesting the true spirit of Vasudhaiva Kutumbakam. And recent dialogues, collaborations and strategies have bolstered India's position in global geopolitics as a balancing fulcrum. Notwithstanding ever-emerging fault lines and fragile nature of demand and supplies, this incidentally bodes well, in particular for the global south. Besieged with the host of challenges, India's digital stack and the digital public infrastructure are now being dubbed as the public good at global scale, and tie up along with these architecture can firmly root our technical leadership, which however remains very much collaborative in nature, benefiting diverse communities, societies, and ecosystems across the jurisdictions. With millions of diaspora firmly in leadership position globally, driving the sweeping innovations and significant corporate footprints, expanding to new manufacturing geographies as supply chains are realigned, the time seems very apt to give a clear and concrete shape to the idea of brand India, which in turn will require strong anchor of thought leadership and extraordinary vision translating to formidable action. Keeping the same in mind this year, we have decided to keep the theme of the conclave as building resilient brand India amidst global uncertainties. We trust the conclave will put impetus on interconnectedness among 4 I's: innovation, investment, infrastructure, and inclusivity to accomplish sustainable and equitable collaborative growth that stays here for many, many years to come. As usual, The conclave will be spread over 2 days, starting today. Both days have plethora of thought leaders, industry veterans, and change makers deliberating upon the key challenges and the best strategies to harness the opportunities associated. Coming to today's proceeding, there will be 3 sessions. The inaugural address by Dr. Vivek Joshi, Secretary, Department of Financial Services, Government of India. CEO panel, discussion on an Indian tomorrow, trends and insight that will shape India's future, followed by a special address on leadership and motivation by Shri VVS Lakshman, ace Indian cricketer and coach. Given cricket as very important connecting thread that seamlessly connect the vast country of ours, I believe we are in for some wonderful insights from the masters of the game on what it takes for the ascent of the nation and its brand equity. I hope the audience will find these topics riveting and informative, and key takeaways will shape the contours of brand India on the rise in the years to come. I once again welcome all of you and hope you have an enjoyable evening. Thank you very much for coming. Thanks a lot.
Thank you, Mr. Khara. You've definitely set the ball rolling and set the momentum for the rest of the evening. But with that, I also want to invite now and get to our keynote address, which is going to be the next on our list today. Let me welcome on Dr. Vivek Joshi, Secretary of the Department of Financial Services. Really needs no introduction, but I'm going to just lay out a little bit of background. In his current roles, he deals with policies, schemes, and legislations related to the banking sector, including, of course, public sector banks, the insurance space, financial inclusion, pension reforms. I could really go on. He also serves as a member on the boards of the Reserve Bank of India as well as the State Bank of India. Dr. Joshi, please do go ahead.
Good evening, ladies and gentlemen. I am really delighted to be part of the 10th SBI Banking and Economic Conclave. My sincere thanks to Mr. Dinesh Khara ji for inviting me to deliver the keynote address in this distinguished forum. I must congratulate the team of SBI led by Dr. Soumya Kanti Ghosh for this celebrations with our 10th in the series. Over the years, SBI Banking and Economic Conclave has emerged as a leading forum for well-rounded discourse on economic and banking issues of contemporary relevance. In tune with the theme of the conference, I would like to take you through building a resilient brand India amidst global uncertainty. Further, I shall touch upon some of the foundations of the Viksit Bharat 2047, which will create a brand new economic entity promoting sustainable and inclusive growth amidst a disintegrated global arena. The vision of our Honorable Prime Minister under Viksit Bharat is to turn the country from developing to a developed nation. For achieving this great vision for the country, all the stakeholders of Project India should synergize their energies to achieve the desired outcome. Now, talking about macroeconomic scenario of the country, I would like to say that the global economy continues to face multiple macroeconomic and geopolitical challenges. This has made the global growth to slow down amidst tightening financial conditions and still elevated inflation. The fallout of COVID pandemic, the war in Ukraine, and unprecedented tightening of monetary policy across the world has been such few big challenges. The challenges to the global economy have been further aggravated with the recent developments in West Asia. Amidst these global challenges, the Indian economy has emerged as an epitome of stability and opportunity. We have not only kept our house in order against large and overlapping global shocks, but have also improved our macroeconomic fundamentals and buffers. Thanks to a number of factors, including to a large extent the steps taken by the government. While our growth remains on track, inflation is on a path of moderation. The balance sheet of banks and corporates are the healthiest in a long time, and with the public investment pushed by the government, all these things create a favorable conditions for sustainable revival in the investment. Consumer confidence, as evident from surveys, is on a rising trajectory since the pandemic lows. Our external sector inspires confidence as we are reaping export opportunities in the services sector. Our current account deficit remains eminently manageable, and we have bolstered our forex reserves to deal with potential eventualities. Today, we can look back with some sense of satisfaction that phrases such as fragile five and twin balance sheet problems are part of our history, no longer a current or even an impending threat. When we scan the horizon now, we can clearly see that many good things are happening simultaneously. In 2023, Indian rupee is the least volatile major currency. We have a healthy balance sheets for banks and corporates, which create enabling environment for a new credit and investment cycle. This will further brighten the prospects of the Indian economy. We can easily say that the twin balance sheet problem of Indian economy has turned to twin balance sheet advantage. The large consumption base of India that constitutes nearly 55 to 60% of GDP helps us to be insulated to a large extent from the vagaries of global slowdown. With India's 1.35 billion population at median age of 28.2 years, 68% of the population belong to the working age group. This helps the nation to enjoy demographic dividend, and India is well poised to take advantage of this. Today, the Indian economy has become the new global growth engine due to three important factors. First is young demography. Second, improved physical and digital infrastructure. And third, an enabling policy environment. Indian economy maintains its stature as the world's fastest growing major economy in 2023 and is expected to maintain the fastest growing status in 2024 despite global headwinds. As per latest IMF estimates, Indian economy will grow from USD 3.7 trillion to USD 5 trillion in FY26. By 2030, India will become US $10 trillion economy as estimated by BCG. In IMF's Article 4 consultations for 2023 that was released last fortnight, IMF has lauded India's growth strategy, including our prudent macroeconomic policies. The IMF has further acknowledged that India has emerged as a star performer and is projected to continue more than 16% of the global growth in FY24. Now I would like to talk something about banking system in India. Thanks to the relentless reforms and substantial investments in banking sector, today our banks are in a position of strength and resilience. Today, they have a strong capital base that provides them in viable loss-absorbing buffers. Credit growth is broad-based and is in double-digit for the last 2 years. To meet the growing credit demand, banks are raising capital from various sources, including capital markets, long-term bond, CD issuance, through competitive deposit rates and drawing down their high-quality liquidity assets. Delinquency in banking sector is almost at a historic low level. The share prices of banks are booming, thereby offering a good opportunity to reward shareholders and employees. Banks themselves have grown not just in size, but now offer a wide range of products and services, including UPI-based solutions, analytics-based lending and co-lending, etc. Today, the Indian banking system continues to be resilient primarily due to 3 things. First, the improved asset quality. Second, stable and broad-based credit growth. And third, robust earnings growth. While the global financial system has been impacted by significant strains since March 2023 from the banking turmoils in US and Europe, the financial sector in India has been largely stable and resilient. This fact is also reflected by sustained growth in banking credit, low levels of non-performing assets, and adequate capital and liquidity buffers. Further, the reach and depth of financial intermediation is being aided by technology and growing digitalization, which provide new opportunities for growth and financial inclusion. In a nutshell, Indian banks are better off than many of its American and European counterparts who are recognized as global role models. The synergies in action by the regulator and the government has resulted in such robust performance. The capital to risk weighted asset ratio of scheduled commercial banks rose to historic high of 17.1% in March 2023. Similarly, the CET1 ratio rose to historical high 13.9 in March 2023. SEB's gross non-performing assets continued its downward trend and fell to a 10-year low of 3.9% in March 2023, and net NPAs ratio declined to 1%. Macro stress tests for credit risk reveal that SEBs would be able to comply with the minimum capital requirement even under severe stress scenarios. When we look towards India's corporate sector, we once again see stronger balance sheets as they have deleveraged, reduced their debts, and considerably enhanced their ability to service both current and future debts. They too are reporting higher levels of profit and are confident about future prospects. Equity raising by corporates and startups is establishing new milestones every week. At a macro level, Indian economy's outlook is realistically optimistic. Evidence from high-frequency indicators point towards sustained strength in demand conditions. Consumer confidence remains positive. Supply chain pressures remain below historic levels. Automobile sales registering robust growth. GST collection is reaching new heights every subsequent month. Indicators of transport activity point towards gathering pace. Construction sector continues its momentum. Services sector remains robust. The government's policy actions are to be seen within this overall context, and this backdrop helps in connecting what might apparently appear to be individual measures taken by the government. Our focus on fostering capital expenditure and new investment in the economy has been sharp and intense. Some of the major policy actions, such as reduction in income tax for new projects, the announcement of National Infrastructure Pipeline, the reforms announced in Atmanirbhar Bharat program, the National Asset Monetization Pipeline, the PM Gati Shakti initiative, the amalgamation of banks, production-linked incentive schemes, setting up of NAFID as a DFI dedicated for infrastructure, setting up of NARSAL as a bad bank, and effecting appropriate amendments in IBC. These are not random actions, but there is a conscious design and an overall strategy behind these government actions. Given the overall picture of a series of policy interventions, banks which are bigger and stronger, companies which are seeing a brighter future, a supportive external environment, and when both the central and the state governments are keen to invest, what is needed now is a new cycle of private investment. The scale and success of this cycle, ladies and gentlemen, will largely depend on the people who are present in this hall. The need of the hour is to think big and think bold while ensuring that execution remains timely and robust. It is not easy, but can be done, and India is seeing this more frequently now. For this to happen, we have to ensure that all of us pull in one direction, and that has been the intention of requesting all of you to come together in this manner. The three key players in CapEx and investment, the private sector entrepreneurs, the bankers, and finally the government as the facilitator, are present here together and therefore make a joined up approach feasible and practical. Banks and FIs too may need to reassess on whether their role should also include hand-holding support for project conceptualization and structuring. There is yet another facet to all of this. While financing of projects and CapEx is vital, it is equally important that small ticket loans for employment generation grow even faster. Furthering of financial inclusion and unlocking potential of citizens is a national priority and a moral imperative. Schemes such as PMJDY, PMSBY, PMJJBY, PM Swanidhi, PM Vishwakarma, etc., Mudra have contributed significantly. But these have been primarily carried out by the public sector banks. We certainly look forward to leadership and initiatives from private banks in this direction as well. Similarly, there are other schemes of the government which either provide direct benefit transfer or provide employment. For all these schemes, the ecosystem itself has changed dramatically in the last few years. Fintech companies are doing great jobs in understanding and reaching out to the new customers at a lower cost. The financial services sector was the sector where such startup technology solutions began, and this is where they have gained the highest traction. As government, we need to open up spaces in non-historical, non-conventional areas for our youth who can bring technology to solve problems which we find difficult to deal with. Who is to say that the innovative technology solutions are not possible for reducing pollution or in dealing with climate change? In our own lifetimes, we have seen what technology is capable of doing, making it work for us in multiple areas using the creativity and energy of our youth will be rewarding and enriching. The government has strategically been promoting digital economy, fintech, tech-enabled development, energy transition, and climate action, and is relying on a virtuous cycle of investment and growth. Now I would like to talk about fintechs and a related issue of cybersecurity. As we know, the evolving Indian financial landscape is increasingly becoming innovative and tech-driven. Where India stack, artificial intelligence, embedded finance, and robotics are playing an instrumental role in its transformation. Conventional lenders have been forced to reevaluate their role and collaborate with new age fintechs to offer personalized loans, savings, insurance, and other financial products. Tech innovations in financial sector have improved the credit delivery mechanisms, the scope for further improvement in banking and financial products, and for further differentiated banking needs. The recent measures taken by the government on digitalization of the economy and availability of data provide a more objective and comprehensive basis for credit assessment and thereby enhanced lending to both individuals and businesses. India is currently the world's third largest fintech ecosystem in terms of number of fintechs operating in the country. While strategic collaboration between banks and fintechs have led to a number of innovations in the sector, ranging from better customer service to last mile credit delivery, it also calls for adequate safeguard to protect the digital infrastructure of institutions and customer endpoints. The government, in close coordination with various stakeholders, have taken a number of critical steps to ensure that robust cybersecurity systems have been put in place by the banks. However, the financial institutions, particularly banks, need to move a notch up now and should include stress testing of cyber risk as part of their risk assessment to gauge the impact in case any cyber attack happens on their systems. Banks in Europe and Singapore have already initiated such steps in this direction, and banks in India also need to take appropriate steps. Customer confidence in digital system is paramount, and any unfortunate incident may shake their belief from the digital payment ecosystem. Therefore, all the banks and fintechs need to ensure robust system and tools are in place. However, there are in recent events of deepfakes where voice of individuals is cloned and used to dupe customers are next levels of attacks. Banks and fintechs need to ever alert and upgrade their tools in order to protect their digital assets from these emerging threats. Talking about digital payment infrastructure consists of unique digital identification, payment system, and data exchange layers. This has the potential to support the transformation of economy and support inclusive growth. India's foundational DPI, called India Stack, has been harnessed to foster innovation and competition, expand markets, close gaps in financial inclusion, boost government revenue collection, and improve public expenditure efficiency. Our financial system is one of the forerunners in addressing the issues of last mile connectivity by leveraging its world-class digital public infrastructure, which include the JAM Trinity, the UPI, the ONDC, and the account aggregator framework, differentiated banking/insurance licenses, CBDC, OCAN, DigiLocker, etc., which continue to drive the digital march. The UPI has played a phenomenal role in fintech innovations in India. Its success story has in fact become an international model. Its ability to instantly transfer money between bank accounts through mobile applications has transformed the way people make digital payment. The interoperability across banks has created a unified payment ecosystem. India's digital instant payment system has got worldwide recognition. Efforts are being undertaken for interlinking UPI with fast payment systems of other countries to enable both foreign inward and outward remittances using the UPI platform. Recently, India has signed MOU with central banks of UAE and Monetary Authority of Singapore to enable users of the two systems to make instant and low-cost cross-border peer-to-peer payments on reciprocal basis. Now a word about climate finance. There is a growing recognition about the role of financial institutions in addressing climate change as they play a key role in intermediation, and climate change is impacting the achievements of their mandate of price and financial stability. Financial institutions in India are integrating ESG criteria into their investment and lending decisions. India's move towards climate transition financing is encouraging. India is progressing to decouple emissions from growth through improved energy efficiency and switching to clean energy. And it is well understood that it is only possible through sustained policy reforms which will mobilize private sector investments, create jobs, and achieve net zero targets. The banking sector here has an important role to play in fight against climate change by supporting reduction in climate change risk and mitigating the impact of adverse climate events. Risk can be mitigated and minimized with the use of green financing. I would also like to touch upon something on insurance sector because both banking and insurance are interdependent and interlinked. To enhance the efficiency and boost growth of insurance sector, the government over the years have taken several measures that include increase of FDI limit for insurance companies with adequate safeguard of Indian ownership and control from earlier 26% to 49% in 2015, and which was further increased to 74% in 2021. Government also allowed 100% FDI in insurance intermediaries, legislatively enabling foreign insurers to set up branches in India, recognizing health insurance business as a separate vertical, established ombudsman rules to solve insurance-related complaints, introduced digital modes of hearing to improve transparency and accessibility. While the insurance industry has made significant strides, there remains a vast opportunity in this sector and need to enhance penetration against various products, geographies, and customer segments. Government has prioritized its attention on overarching theme of insurance for all. With a firm intent to ensure financial inclusion, we are now committed to Jan Suraksha, whereby every citizen is entitled to be covered under pension and insurance umbrella along with access to formal financial network. To attain these objectives, efforts are being made towards creating a progressive, supportive, facilitative, and forward-looking regulatory architecture to foster a conducive and competitive environment. In the end, I would like to conclude by saying that, as already mentioned by Chairman Khara Saab, that the panel discussions which are likely to happen in next 2 days are very important and futuristic for are futuristic. The discussion themes of CEO panel will enlighten us in knowing how the corporate world is seeing the new India. The panel on regulators, I am sure, will convince us in answering the most difficult question: how much regulation is optimum? We look forward for this. The banking and technology panel will be of interest for all of us. In my view, today's banking without technology is meaningless, and I believe the imminent panel will throw some light upon the latest technological advances in BFSI area. The last panel of the conference, the economist panel, will also be an interesting one. And listening to the veterans on how India is positioning itself as a star in a cloudy and gloomy global environment will boost our morale, and moreover, the innovative strategies and the synergies among different economic agents in driving India to its new height will be a thought-provoking conversation. I am sure this August gathering will contribute richly to the discussions on the issues and challenges that confront the global economy today, particularly India, today and tomorrow. Moreover, the intellectual discussions spreading over 2 days that have brought a deadly combination of C-suites, regulators, technology experts, and economists will definitely enrich our understanding, and the synthesis will be a great source of inspiration for all those days to come, and shaping us the policies for the vision of Viksit Bharat 2047. Thank you, ladies and gentlemen. Thanks for your patience for listening. Thank you.
Thank you for that wonderful session. I would like to have you back on just so that Mr. Khara can hand over a small memento, and if we can take a picture as well, please. So this is a shawl as a token of appreciation as well as a green certificate that Mr. Khara will be handing over. Thank you, gentlemen. We are almost ready for our panel discussion. I'm going to allow the team just a minute to be able to set up the chairs, and then we will get to it. remains sticky here in India, we find ourselves on a steady growth path. Now, what will the thrust really need to be as we move on in our future? The focus now really comes to how we can build on this steady future, how we can envisage and create a stronger tomorrow on what has been quite a solid base for us here in India. What will the path really look like as we get set on creating a future dominated by India and led by India? Where will the thrust need to come from? What are the challenges that need immediate attention as well? We have our first panel discussion centered on the topic of an Indian tomorrow. Trends and insights that will really shape our future and that will create this Indian tomorrow. So let me invite some of the top minds from the industry to discuss this very interesting theme with us here today. First up, I would like to call Mr. Ananda Bhaumik, MD and Chief Analytical Officer, India Ratings and Research. Next up, also Jayant Acharya, Joint MD and CEO of JSW Steel. I would also like to call on Gurdeep Singh, who's CMD of NTPC, Ashish Kumar Chauhan, MD and CEO of NSE, Mr. Som Satsangi, who's Senior Vice President and MD of Hewlett-Packard Enterprises India, as well as Mr. Dinesh Khara, Chairman of SBI. And to moderate this discussion, of course, we have CNBC TV 18's Managing Editor, Shireen Bhan.
Just give us a minute. We're about to go live, so I'm just waiting for them to give me a cue, and we will be live on CNBC TV 18. Good evening, ladies and gentlemen. Thank you so much for joining us here for the 10th edition of the State Bank of India Conclave. We at CNBC TV 18 are particularly proud that we've been part of this effort and this endeavor for the past decade. And I personally have been doing this CEO panel for the past decade, so it's great to be back here. And it's great to actually be closing out 2023 here at the SBI Conclave, a year, as all of our previous speakers have very clearly articulated, has been a good year for India in many, many ways. It's been a good year as far as macros are concerned. It's been a great year for the banking sector. It's been a particularly resilient year for other sectors, including, of course, sectors like steel, cement. Consumption story has continued to look good. But more importantly, the question that we now have to face is what happens in 2024 and beyond. Will we continue to enjoy the kind of sweet spot that we found ourselves in 2023, and more importantly, what do we do to build on the momentum that has already been gained over the last few years? How do we leverage on the advantages that we currently enjoy? We've got, to quote Mr. Joshi, a deadly combination of speakers here on this panel, so I'm going to try and elicit as much as we possibly can from our eminent speakers here. But before we talk about India of tomorrow, I would like to address the India of today, and there are many current issues to address before we look into the future and look into our crystal ball to see where India could possibly be positioned. So Mr. Khara, as the host, I'm going to start with you. Let's talk about the banking sector, because as we just heard from Mr. Joshi, it's been a great year. Not just a great year, it's perhaps been the best year in a decade for India's banking sector. Very robust, very strong credit growth, and of course, NPA is not a problem at this point in time. He asked you to think big and to think bold. What could that mean?
Well, as far as banking sector is concerned, it goes in sync with the overall macro. And if at all macro looks so promising, it's very natural on the part of banks also to act and think big and bold. It's not only, I would say that we get the encouragement because the kind of resilience which we have demonstrated in the last 1 year, or rather all through the pandemic, that's a reflection of the very sound policies which have been practiced and promoted by the regulatory environment and also by the Government of India. I think I would actually go back to the era when, the time period when the pandemic had hit the economy. Perhaps we as bankers were the most worried lot. And that is one of the reasons why we all took all the precautions and ensured that the balance sheet stays protected and strong. And I think the net result of that is that, and also the Government of India came out with a very, very practical policy in terms of ECLGS, which actually ensured that the employment should not get affected. And also at the same time, the bankers should have the courage to lend in such situations. And we have seen when all that is behind us, the kind of assets which got built around the same time, the delinquencies were much lower, and we had a reasonable buffer available within the balance sheets to address the challenges. And I think I would attribute it to the fact that the government policies were quite clued on to what was happening on the ground, and even regulator was also very mindful of the ground realities. And that has helped the banking system to build the resilience in the most difficult times. And actually, going by that only, I would say that in this year, in this calendar year, we have seen the huge meltdown in US when it comes to the banking system. And it was essentially nothing but the interest rate risk which had got reflected in the US banking system. But over here in India, we stayed insulated. So that has further gave us the confidence that yes, we are into a strong territory and we are practicing sound policies. So I think this is something it augurs well in terms of how should we navigate the challenges which might really erupt on the global landscape. One, of course, is the fact that Indian economy to a greater extent is insulated from the global threats. Almost about 85% of our GDP is domestic. And there's a huge demand, domestic demand is there, thanks to demography, thanks to the GDP growth which we are seeing. So demand is it's quite strong, and we don't have the supply side challenges. And that is something which we have seen in terms of the inflation, the way RBI has acted throughout the year. We have seen that we stopped increasing interest rate much before the global central banks stopped increasing the
The question now is, when do we start to see the cuts coming in?
Sorry.
When do we start to see the cuts coming in?
I think we are on a right trajectory because inflation is much within control, but we are very clearly aiming for just about 4% inflation. But I expect that maybe somewhere middle of the next calendar year, we should get to see the reduction in interest rates.
Since we are talking about interest rates, sir, you've hiked deposit rates just today, Mr. Khara, by up to 50 basis points across different tenures. Is it because Ashish Chauhan is giving you a run for your money? I mean, what's led to this deposit rate hike?
No, it was actually, we always believe that we have to stay, we have to offer a fair deal to our depositors also. We don't want to compromise the interest, and as far as deposit is concerned, it has got a franchise value. As we are more than 200 years old, we have to take care of our depositors too. So that is the reason why we have done some calibration in terms of interest rates.
So is this going to be the trend? Because you have clearly kick-started it. Do we anticipate this to be the big trend now through 2024?
I don't think so. It will be the decision which will be taken by a bank depending upon their individual positions. But yes, of course, we had some elbow room available, so that's the reason why we have done this.
Okay, I'll come back to the navigating of opportunities and challenges in just a second, but let me get to today's opportunities and challenges as well. And Ashish, let's address the market movement. As an umpire, you cannot comment on the market movement, but what a great day it's turned out to be. Another record high as far as our markets are concerned. What does the story at the end of calendar year 2023 look like to you? The FPIs have returned, domestic participation has been very, very strong. What would you articulate that has been the big trigger, has been the big turning point as far as the equity story is concerned in this year, and more importantly, looking ahead?
Thanks. In a way, if you look back for the entire year, I think Nifty has returned almost 18%, still 2-3 days to go. There are other indexes which have returned 23, 40, and
Nifty Bank has done very well
and
as
the
well.
small cap Nifty has returned 60%.
Yeah.
Right. So effectively, if you see why it has happened is also interesting. But if you look back previous year vis-a-vis this year, the interest rates were going up because inflation across the world had gone up because of the wars and supply chain disruptions and all. And that's where basically the year began. And somehow the FPIs were pulling the money out. And in some ways, few times I have said that this is the year where the circumstances did not take over Indian activities. Earlier, whenever the oil prices went up, we used to be in trouble. Interest rates abroad would go up, we would have FPIs taking money and markets will tank. This is the first time we didn't see that happening. Indian investor was sort of investing increasingly larger amount every month. And that's why the Nifty and every other index kept on staying there. And then towards the end of the year, when the US started decreasing interest rates, and of course, there is a potential that it might go further down. That's why all the FPIs are back. There was also a China factor where China is going to slow down, which it did, and what its impact would be on the rest of the world. But I think, as Mr. Khara said, we have been slightly insulated from the world. On the other side, like today, you would have also seen another interesting statistics of India's current account deficit coming down to almost 0.1%.
Yes.
Because why did this happen is because our services and remittances have now gone much more than our imports of oil, electronics and gold, which were like three things we could not have stopped. And once you start going up on the export chain, there is nothing stopping you. That's how I see this. Finally, we are reaching a place where we are actually preparing for a takeoff.
Preparing for a takeoff in 2024, and you believe that the groundwork has been laid. But, since we're talking about, and I'll go into more details, but I want to talk about one significant inflection point that you expect or anticipate to see in 2024. The market is waiting for that. NSE IPO, are we likely to see that in 2024?
I don't know whether you've invited my regulator, but I wish.
Well, you wish, and that's certainly, as I said, something that people are looking forward to in 2024, but we'll talk in greater detail about what could be the move as far as the markets are concerned, and of course, capital market reforms in general. But Mr. Singh, let me address the issue. Power demand, again, holding up, very, very strong, double-digit growth. There are constraints, of course, on the coal side. The government, though, seems to be changing its stance a little bit on thermal capacity. And now the mood seems to be that, look, you need to add thermal capacity even as you go out there and add renewable energy. How would you sum up 2023? Your stock has done very well, up 80% for the year. How would you sum up the year, and more importantly, the priorities for 2024 and beyond?
Thank you. I think we have already heard a lot of things that how the economy is doing, and we in the power sector, we always call that our frequency of the grid is the pulse of the economy, and how
strong is the pulse?
Yes, I think it is what we are making is that we are making it as stable as per the consumption, and you rightly said that we have recorded almost double-digit kind of growth, both in terms of the peak as well as in terms of energy. And I can assure that as the demand goes up again, rather than keep going up, we will make sure that the power supply is available and it is affordable also along with that. So the reliable power and affordable power, I think that is one of the main objective. And I think we all know now that in the last few years only transition was being talked about, but in the last 2 years the security, energy security is paramount, and then only the transition can happen. So we have to use the resources whatever we are having, but then we will have to go towards transition as fast as possible, as far as sustainable. Let me, I think, clarify one thing here, take the opportunity to send the message. It's not a problem to have the coal-based plants, but I think how much is the utilization, that is how the emissions and the climate is really dependent on. So while we will require a lot of capacity to meet our peak requirement, but at the same time when we are going for the large capacity of the renewables, the PLF will start coming down. I think that's what it's. And we are working on all the fronts, whether it is coal-based, what you rightly said, but more aggressively on the solar, wind, and going forward for the new age fuels like the green hydrogen and the chemicals. And so there has been work which is going on on how we can take the advantage of the circular economy, how we can capture the carbon dioxide and utilize the green hydrogen and make the green methanol, which is far better than go on bringing or the importing, I think, the hydrocarbons from outside. So it's one way of going towards the self-sufficiency.
You know, just to pick up on what Mr. Joshi said, he said that people sitting in this room, including people here on this panel, both representing the private sector as well as public sector, will be responsible to drive growth and will be responsible for the investment pickup. Now, given the power demand that you foresee today, as well as the visibility that you have on demand going forward, what should we expect in terms of capacity addition? What would that result in as far as CapEx spends are concerned, say, over the next 5 years?
Yeah, I think Dr. Joshi was very bang on, and he was very right that the corporate has to really follow. I think he is in the role of making policy and enabling environment, and we all have to really make sure that it is being implemented on the ground. As far as NTPC is concerned, we had been, our capex has been in the range of around 25,000 crore, it's kind of thing. Going forward, it is going to increase, and it is going to increase at least by 30-40%. And we have to reach, we have stated objective that by 2030, we will be adding on the renewable side 60 gigawatt. So today, we are having 3.5 gigawatt, which is commissioned. 7.5 gigawatt is under construction. So it's almost every month something capacity is getting commissioned. And another around 20 gigawatt, which is in the different forms of the kind of developmental activity. So we have no doubt that by 2030, we will be able to achieve 60 gigawatt rather before that. And we know that 1 megawatt is somewhere between 4 to 5 crores. So it's I think the math is very simple in that case, at least for the CNBC.
Yes, for CNBC and our viewers will do the calculation, but a 30 to 40% increase in capex is what you anticipate to be able to cater to the demand expectations. Mr. Acharya, let's talk about capacity and let's talk about demand as far as JSW Steel is concerned as well. You're going to be adding another 7 million tons, I believe, by FY25. Given where we find ourselves with the strength and the resilience that everybody is talking about, what's the kind of demand outlook you foresee? And more importantly, not just domestic demand, but also export demand. What's the outlook?
Yeah, so I think, India being the fastest economy, we are seeing a very strong growth momentum in India. And this will continue for, I think, about 2 decades. We call it the nation building phase of the country. And during this time, structurally steel will be required. Usually steel demand accelerates at a faster pace during this, let's say, period, 1.5 to 2 times of the GDP. So in the last 2 years, if you look at the demand, the steel demand has grown by 13% the previous year, and this year it's growing at close to 15%. If India wants to be self-reliant in terms of steel, we need to add capacities just to make sure that we don't import steel. We therefore at JSW Steel are building capacities. Currently our capacity is about 28 million tons in India and 30 million tons globally. We plan to take our capacities up to about 50 million tons before the end of this decade. We see a strong momentum, maybe not 15%, but a 10% double-digit, 8 to 10% growth is something which is easily possible. And this would call for a capex, additional capex in excess of 100,000 crores.
Of 100,000 crores. What do you believe is driving this demand at this point in time? And especially as far as the export market is concerned, with China being, since that's a big factor that everyone has spoken of on this panel as well, with China being in the phase that it is going through at this point in time with an uncertain recovery underway, what is the opportunity that presents for Indian steelmakers like yourself and for India?
So I think India is lucky to be, as Mr. Khara rightly said, we are lucky to be a domestic dependent economy. So we see also about, I think typically 10 to 15% is the exports from India if you look at direct steel. But where the opportunity lies, I think India is going to, first of all, as a country, let's put it this way, that India's current capacity is about 170 million tons as we speak today. Our aim is to get to 300 million tons of capacity, and the production would be in the range of 250 million. Which is double of what it is today. Majority of this would be consumed in the domestic market. As we grow into the, I would say in the next 7 years, as you said, I would see more exports of engineering goods out of India and less export of direct steel. So if I were to see the ratio between India and China, we export about 1/10 engineering goods versus China. Now with this opportunity opening up, post the China +1, kind of a preference, I think India has a huge opportunity to grow this pie.
Well, speaking of opportunities and speaking about this China +1 specific advantage, Mr. Satsangi, let me address that question with you. Because HP has been a long-term investor in India. In fact, outside of the US, this is your largest employment base. You've got about more than 20% of your workforce here operating in India. You're now also a beneficiary of the government's PLI scheme. You applied for that and you've got it, and you're going to be building tablets and servers, etc. here in India. Stack up for us the opportunity that India presents from a domestic point of view, but more importantly from an export perspective as well, as we just heard there from Mr. Acharya.
Yeah, thanks. So probably when I was looking the panel, I thought I'm the only odd man out from the tech side. So let me give the perspective, and I was really impressed.
You're at the center of it all. Technology is driving everything. You're at the center of it all.
Yeah, and when Dr. Joshi was giving his keynote, I was wondering, because he was talking of all tech, that how tech is going to help. And probably I think all of us should be proud Indian that how the technology is shaping. And one of the fundamental thing what India has done and achieved because of this growth, what we are seeing, is embedded because of the technology transformation. And I must say that one of the reasons why we are seeing such a strong, robust growth, while all the parameters are right, and there are a lot of things government has done right in terms of the policy, in terms of the infrastructure development, road transportation and all. But one thing which is stood very differently from the other market is the digital adoption. The way the government, the enterprises, the MSME, they have adopted the digital transformation has really shaped the future of this country. Today morning, I was just going through some of the data, whether you look at the Aadhaar, UID, or some of the Smart Tag and ONDC and all. I was amazed because we manage many of these critical infrastructure. And one thing which I wanted to highlight is the Aadhaar. With 1.3 billion Aadhaar, this thing, in 6 months, the Aadhaar has authenticated 53 billion transactions. Just imagine, that's a power of digital adoption, which is helping to fuel the growth of the economy and all. And surely the Honorable Prime Minister's vision about self-reliant India, Atmanirbhar Bharat and PLI is really fueling this growth further kind of thing. And you rightly mentioned the way we are seeing the PLI adoption, the tech industry is going to be the most beneficiary with PLI 1.0 and PLI 2.0. But more importantly, this time, the government is listening to the industry based on the PLI 1.0. There were certain gaps.
Yeah.
And in PLI 2.0, when they wanted to launch, they have taken the input from the industry, what exactly is required so that we can put up front. And probably we feel that PLI 2.0 is going to be reshaping the entire India economy, and not only for the India consumption, but for the export-oriented growth. So what we heard from JWS or from NTPC chairman, sir, probably we are going to be seeing the same thing in the IT and technology side.
Well, that certainly is the hope, and that's certainly the aspiration that the government has as well. But, let me ask you, since we're talking about big, bold bets, you made a big, bold bet on India in 2019. $500 million is your, investment plan for India. Given the demand, given the visibility, given the opportunities that you foresee, do you expect to up that significantly?
Yeah, so you are spot on in that thing. And first thing I wanted to correct, this quarter, we have become bigger than even US in terms of the head count. So today now for HPE, India is the largest in terms of manpower.
Wow.
Okay. And
that does
also,
deserve a round of applause.
Yeah. And also when last time you interview our global CEO Antonio, he committed $500 million investment, and we are on track. And one of the key reason of this investment was that we wanted to bring the technology to the country. Yeah. And we heard that today, we are living in the AI world. And the AI age is what is starting from India with our recent Honorable Prime Minister hosting the Global Partnership Summit, which was attended by almost 29 countries. And that's where it is fueling the growth kind of thing. And we feel that India is going to be the home for newer technology to come. While it has got both side kind of things, and we also see that how organizations and countries and governments are looking that it has to be ethical AI, that AI adoption needs to be done. But certainly AI is going to be transforming and bringing the next level of growth in the country.
Yes, AI certainly is going to be one of the big lead factors in shaping the future. But Mr. Bhaumik, let me address the issue with you as well in terms of trend spotting now. Given the momentum that we're already riding on, what would you say that we need to focus on? And more importantly, what will you be watching out for? What are those headline numbers that you're going to be watching out for?
I think a few things that we've been seeing for the last couple of years. We've all been amazed at the resilience that Indian corporates has shown through this significant headwinds that have been faced. And even as we were seeing significant upgrades to the ratings and people were a bit skeptical about that, I think a lot of that has actually borne out. I think what we continue to watch is the way Indian corporates are taking advantage of the opportunities. Mr. Acharya talked about engineering opportunities, and we're actually seeing that in capital goods. As Indian entities have, I think, order backlogs up to the next 4 years, supplying transformers and other equipments for renewable capacities in the US. There are opportunities on the consumer side, not the staple part, but on the aspirational products where people want to upgrade themselves. Infrastructure, of course, would continue. Cement, steel, power, of course, is seeing a major transformation. I think this is indeed a good time. From a rating agency perspective, I suppose one of the things we would see from a policy, and we have very alert regulators, one of the things we would continue to like to see is balance sheets continue to be buffered up through counter-cyclical strength, so that whenever a downturn comes, or if an idiosyncratic event were to hit either through cyber frauds or governance issues, entities are better prepared. So we would like to see those buffers being even more strengthened.
You said that this is indeed a good time for India. Let me go back to very recently, I think just about 2 days or 3 days ago, the chief economic advisor has basically said that rating agencies don't seem to acknowledge the fact that India has done actually very well and should in fact be changing their stance and their position on India. How do you react and respond to that?
I can't, I don't have a sort of a ringside position on that because I don't sit in on the rating committees. I'm sure rating agencies are listening to this long and hard. And I think the criteria that they adopt is transparent and is well explained. But I think the bigger point is, if you look at the articulation that rating agencies are making at this point, I think it's become a lot more balanced, a lot more benign now. People understand the benefits that growth is bringing in, and all they want to see is that it's a narrow, limited point of the balance sheet of the government, whether that is going to adhere to a declared path, and whether that path is going to be sustained and confirmed.
You know, let's address the capital issue, and I'll get Mr. Bhaumik and Ashish, both of you, to comment on that as well. You talked about the return of FPIs, and of course, we saw the domestic institutions coming in and stepping up even when the FPIs decided to retreat. But the many changes that have happened, and let's talk about the T+1 settlement change that is going to happen next year as well. You know, how do you see the changes that have happened in the capital markets, the derivative side? We are today the largest in the world. You know, as you look forward, from an India of tomorrow perspective, you know, shape out the capital market story for us and what you see both in terms of fund flows as well as in terms of reforms.
Interestingly, this year, the raising of funds was around 10% lower than the previous years, largely because interest rates went up across and many companies did not raise funds for the first half broadly. And now, this first calendar half, and now slowly they are coming back to the market. You can see that euphoria. So in some ways, today when we stand and look back, the year looks great because we are looking at like 18% returns on the large cap and 60% on small cap. But it's in a way, when the year started, it did not look that good. In terms of the India's capital market story, I think from 1992 onwards, the liberalization story, 94 is when NSE started working. And since then, Indian markets have been thought leaders and execution leaders across the world, not only in how do we process the transactions. We were the first successful automated markets in the world. After that, US, Europe, Japan, wherever you can think of, they became automated after us in 1994. NSE was pretty much the first public digital infrastructure of India. And that's India's even IT prowess. I still remember Som coming to me those days also. And so India's IT prowess came out of NSE, literally. NSE was the first experiment of public digital infrastructure, which went to villages, to towns, and that's where India kind of developed all that usage. But having said that, today, in terms of corporate governance, despite whatever controversies that have been created, we are pretty much the top 5 markets in corporate governance. There is no similar market. Why I'm telling you this is, despite all our growth, recent times or past, we are still at 2,700 probably already, although it's a low frequency data, so probably we are already 3,000, 3,100 USD per capita income today. But there is no market at that number, at $2,500, $3,000 per capita, that is so vibrant. We are now the 4th largest market in terms of market capitalization in the world with like $4.25 trillion market cap. After US, China and Japan, although Bloomberg and everyone want us to believe that Hong Kong is a separate country, it stopped being separate country long back, right? But somehow agencies have tendency to give you all that stuff, right? So effectively, $4.25 trillion of market is basically an individual sitting in Jorhat or Dibrugarh or Srinagar, investing her hard-earned 1,000 rupees into a company working out of Salem. She's never going to visit that company, but she has complete confidence that her money will be not wasted, and when the profit comes, it will be given to her, that portion of that profit. And for me, that concept of capitalism has spread across, that participatory trust into unknown people. Unknown people investing in unknown people, like what I call, India has become a very trustful nation in the last 30 years since NSE's advent began. NSE, when it started, it was 4 lakh crore rupees market capitalization, total India's. Today, I have many companies with more than 4 lakh crore market cap. Today, India's market cap in rupee terms is now 3.5 crore rupees, more than 85 times in 30 years. Right? And those are the numbers, 8.35 crore investors. In fact, just to give you another stuff today, another interesting statistics, now UP has become larger in terms of number of investors compared to Gujarat. So first is Maharashtra, of course, with 1.5 crore.
So UP has beaten Gujarat in terms of the number of investors.
So UP is now calling shots in many areas, but also in now stock markets. And so you can see the demographics are changing. People, I was in Uttarakhand a few days back, and I was checking out the number of investors coming from there. And it is the same proportion as the average Indian proportion in the stock markets. I could not have imagined that Uttarakhand has actually started participating. Why I'm telling you this is India's public is now trusting India's entrepreneurs. Whoever is telling you whatever, please don't believe. People are putting their money, hard-earned money, into India's entrepreneurs, and I think that is the story of last 30 years. That will be the story for next 50 years.
Well, the true democratization of the Indian equity markets, that you believe is the story that will shape the future as well. But since we are talking about capital and we're talking about flows, many significant changes have happened, including India's inclusion in the emerging market bond index of JP Morgan. You know, what could that potentially lead to? Of course, with that move, an expected or an estimated $25 billion is expected to come in. But what will this lead to over the next few years if more inclusions were to follow?
I think our near-term view is that liquidity conditions will now start improving, partly elections, partly JP Morgan and other factors. So I think from a liquidity perspective, the supply would become more available, and so therefore we become a less constrained economy in terms of these resources being available to us. At the next level, I think we become more integrated in terms of disclosure requirements and governance expectations with the rest of the world in terms of disclosures and periodicity. So I think that's the next level of, and obviously our top 1,000 companies are already adhering to that. Yeah. I think it would now start sinking into a larger base, and so therefore the pyramid sort of elevates itself base upwards.
Mr. Khara, let's talk about the road ahead. Now, there is a meeting with the Finance Minister on the 30th of December. I would imagine that that's stock taking about the year gone by as well as what the year ahead looks like. But outside of the next few months, what needs to be prioritized now from a banking sector's perspective? The unfinished reform agenda, for instance, on the insolvency code, there are amendments that have been sought, amendments that have been spoken about, discussed. You know, what should the road ahead look like now in terms of priorities from your perspective?
Well, I think one, of course, we have to support the growth initiative, and we are very clearly, there is a lot being talked about the private sector investment. So if I may say, from this forum, we have got a very clear visibility in terms of the fresh proposals coming in. What we have actually seen is that the private corporates, they had a lot of cash sitting in the balance sheet. First and foremost, the investment happened by deploying that cash. And now they have come to a stage where they have understood the growth opportunity which is there, and we are very much there to support their such initiatives so that the private capex should now take off. This is what our first priority is. And of course...
but we've been waiting for that takeoff. I mean, it's been, in the words of the Chief Economic Advisor, incipient signs of private capex picking up. When do we start to see robust signs of private capex?
In fact, that is what I'm saying, that, until now, we have seen that the investment has happened from the internal resources. As Mr. Gurdeep Singh also said that there is a huge capex lined up for the next financial year. And similarly, I would say that many other public sector entities have also lined up the capex for the next financial year. The way I look at it is that it is going to be a blend of both the public sector, government, and also the private sector, but we will get to see more private sector investment also coming from the banking system as well. So that is one priority. And second, of course, digital is something which has been one of the very forefront for all of us. And we have invested well in terms of upscaling ourselves as far as the digital capabilities are concerned. And of course, all said and done, the cyber is one area, cyber risk is one area which all of us need to really guard against, be it banking or non-banking entity, any entity, because today there is a huge dependence when it comes to the operations of any entity on the information system. So we have to guard against that. That is another very important priority for us. And I think the other area where we all need to work on is how to make the organization digital-driven organization in terms of leveraging analytics. So that is one of the other very core focus area for us, to understand the customer better and offer them the products which they are all looking for.
So if I can just focus on that, because that's the running theme as far as this panel is concerned, that a lot of the growth will be driven by technology and also the technology transformation that banks like yours and other companies will have to undergo. how much are you investing in technology today? For instance, what do you foresee that to become over the next 5 years? What will that mean in terms of bank branch expansion? What will it mean in terms of workforce allocation, reallocation? Lay out for me what you envisage the next 5 years to mean and what technology will do for you.
Thanks to digital, today we are bank of our size. We have got almost about 88% of our transactions are digital. And 98% of the transactions are happening outside the branch. But if somebody asks me whether we don't need so many 22,400 branches, my answer is no. Because the kind of diversity of customer base whom we serve, we have to have the physical presence. And let me share with you, when it comes to financial sector, unless and until there is a physical location of an office in the far-flung area, the ability of a brand to get the confidence of the customer is rather very difficult. So I think from that point of view, after all, since we deal in a fiduciary capacity, we deal with the customer's money, our presence on ground makes a whole lot of difference. And also, having said that, I must also mention that the country needs a lot to invest in terms of financial literacy. And from that point of view, the public sector banks have done a great job all this while. But if you ask me whether we have completed that, I think still there's a room for improving that financial literacy. So I think to that extent, we will have a coexistence of digital as well as physical. So that's why phygital is going to be a reality for us, for all the banking system. Having said that, I must also mention that when it comes to what you mentioned, what will really engage us for the next 5 years? To my mind, there are many repetitive jobs which are being done at a bank. So I think the Gen AI is going to be the next big talk. We have started...
Next big talk or next big thing for the bank? Have you already started to incorporate?
We have already started working on it. So that is something we actually started working with the analytics in a big way. And now we are moving towards the Gen AI. So I think in the next 5 years, we'll probably see that unfolding. And probably it will help us in addressing the customer's need. And also will probably shape up the way banks will be run in the days to come. So many of the repetitive jobs we will have, probably will get to see the distributed ledger very much in adoption going forward. We'll get to see Gen AI getting implemented in the banking system, and we will get to see the data-driven organization as far as the banks are concerned. So which will actually show up in terms of our ability to manage risk, ability to understand risk, ability to understand the customer's behavior, and also figure out the exceptions in no time. So which will also address part of the risks which are there in the digital, even that will also get addressed in this whole process.
But speaking of risks and speaking of appetite, Mr. Joshi said that it is going to be a world where banks will have to collaborate with fintechs. You've of course got but given the fact that you aspire to be a much more digitally driven bank, could you look at M&A as far as fintechs are concerned? Would that be something that you would consider in the future?
See, actually, the way fintechs are grouped, they offer solution to a problem in particular. And also they are nimble-footed. So for entities like us, we have to marry the size with the agility. And I think with that can perhaps come, if at all we collaborate with such fintechs and we consume their solutions, we pose problem to them and seek the solutions. And I think that is going to be the model. It has already started happening. It will further get strengthened in the days to come. And also, I would also like to mention, we as banks, we have to ensure that the whole ecosystem is secure, which also means that the partners in the network also are equally secure as we are.
Yeah.
We cannot afford to have any kind of a laxity on the part of any of the ecosystem partners. So which also means that it is the responsibility of a senior partner in this whole job to ensure that there is adoption of the security standards, which will actually keep the whole system secure.
Absolutely. And that is the role that you see yourself playing as well, but no M&A at this point in time.
M&A, that's why I said that M&A, if at all we do, then they become part of our entity.
Yeah.
As I was saying that, we need the nimble solutions, and
Yeah.
nimble solutions will be possible if they
If
stay
they're
where they are.
outside, if they're outside of SBI.
If they stay where they are. But having said that, I must also mention that we at State Bank of India, when we are now embarking upon our 2.0, we have got the garage system. We
Yeah.
are probably as nimbler as probably any other fintech is. But the idea is that if at all they stay as fintech, they will be adopting to the newer ways of looking
Yeah.
at the problems.
Yeah.
That is something which we want to always
No,
consider.
fair point. I understand that. Yeah, Ashish, you want to make a point.
No, I wanted to make a point. He made it later on, saying they are the fintech, right? Although, I mean, literally SBI has converted itself into a fintech, and I think kudos to the top management and also the middle management for doing what they have done
Yeah.
to a bank which is like 200 years old, right? So for me, I have not seen many such transformations in the world. This is top of the line, and what they do with their applications across India is phenomenal.
And whether they are actually going to spin off YONO separately or not is of course, the much asked question as well.
I must also answer that. I have said it on various earlier forms also. Well, YONO is a part of our distribution channel. How can you ask me to spin off a distribution channel? I cannot spin off branches. I cannot spin off my YONO, which is my distribution channel. So it has to be part of us only. But we will keep on investing into it. We'll ensure that it remains ahead of the curve. It should be better than many others.
Yeah.
And that is what our effort and endeavor is.
Yeah, speaking about the future, and let's talk about the renewable energy transition that you spoke of, as well as the renewable energy bet, which you're also making. You have a green vertical. At some point over the next few years, do you believe that you will possibly IPO it or bring, investors on board for it? I mean, given the demand that you envisage, as well as the aggressive transition that's required.
I think that is a right conclusion. And why we should not monetize that? So maybe I think down the line in next 1 to 2 years, as we add up the capacity and further there is a pipeline of growth and further utilizing not only as the energy, but I think once the storage starts becoming the reality, means it's becoming the affordable storage solutions. This green energy will be having much more scope, and maybe I think down the line about, let us say, about decade or 2 decades, I think this may be even overtaking many other companies itself. And we would be definitely looking forward, and that's our thinking process, which is nothing secret in that maybe I think down the line about a year or 2, then we will be going to be listing this arm anyway.
Okay.
So
an IPO in a year or 2 as far as the green vertical is
Absolutely.
concerned. That's the roadmap that you...
But we will be just going to start with a very, very small percentage, which is, I think, whatever the mandatory is. Because as you know that as of now, we are not constrained with the kind of raising capital. I think Mr. Khara is there, and we always to bank on.
Mr. Khara is always there for everybody.
But at the same time, I think to increase the shareholders' value and to maybe giving participation to larger public. I think once we are going for public, I think they will be also the owner of the company, and they should be feeling proud that they are owning the shares in the green company.
Since we are talking about India's place in the world, and the assumption is that given the growth opportunities that we foresee, that India should lead growth. Let's talk about the export opportunity as well. Now, we've seen, even as far as the steel sector is concerned, we saw some big ticket global acquisitions happen, but then the domestic demand has been buoyant and robust, and so companies started to focus much more on the domestic market. But over the next 5 to 10 years, how do you see India shaping the steel sector, shaping output, shaping demand, shaping supply?
Yeah, so today India is the second largest producer and consumer of steel. I think for a foreseeable future, I see that India is going to consume a lot of steel. Therefore, all of us are focusing in terms of creation of capacities in India. Having said that, I think what would happen over time is that downstream capacities can be set up in the consuming markets worldwide. And the basic steel gets produced in India, and then consumption point you create downstream capacities and then add value there and supply to the customer just in time. That's a possibility which could come over time.
Would that be driven by M&A? Would that make sense?
It could be a combination of M&A or a greenfield site as well.
Okay. Is that something that you're considering at this point in time?
No, nothing as such.
Nothing at this point in time. Since we are talking about the trends that will shape, the consumption story, of course, has been the big story that India, one of the big growth engines that India is driving on at this point in time. If we were to see the kind of per capita rise that is expected and estimated, what could that potentially do over the next 5 years to some of these sectors that we're talking about?
I think that story has already begun, and so therefore I talked about aspirational purchase. Ashish talked about real GDP on a PPP basis. India's already crossed $8,000. So these are in some way cusp points, and as people, and it probably crossed $10,000 in maybe 3 or 4 years. And these are cusp points, and as these cusp points get crossed, people's aspirations move away from basics into more upgrades of life, and they expect as well better public facilities and better environmental products. And so therefore, I would think that India's focus would continue to be focused more and more on value add, and then less of a primary supplier to the rest of the world and more as a value added supplier. We are clearly globally competitive as far as the services sector is concerned. We talked about how now the GCCs are contributing majorly to CAD uplift. We hope that with all the incentives of the governments, we would start seeing that in some of the manufacturing sectors as well. We already have world-class manufacturing in pharma, and then some of the auto ancillaries are probably world-class, and we'll probably start seeing that in other. And so therefore, just to sort of summarize this, I think what it means for all of us is continued focus upon being the best in the world, and setting those standards for ourselves so that we are as competitive as any other competitor. And I think both from a governance as well as from a cost standpoint, those are what our benchmarks are. And I think the digitization is going to just help us pass on those benefits to the customer.
Yeah, and the digitization is helping alleviate some of the concerns that we do have on the cost side as well, though not entirely, at least not as far as logistics, etc. are concerned yet, but the hope is that that will start to be factored in as well. Let's talk about the manufacturing story, because as I pointed out that you are a beneficiary of the PLI and you hope to start building that out. Over the next 5 years, what is the kind of potential that you hope to unleash here from India as far as the export market is concerned? You've got collaborations with HP and, with Google and others, and you are manufacturing for them here as well. What do you foresee that to result into over the next 5 years?
Okay, so before I answer this question, let me just add one point which Mr. Khara was mentioning in terms of SBI adopting the latest technology. I've been personally associated with SBI from 2000 onward on the technology side. And 2001 was when SBI decided to move from ALPM to core banking. That was the first bank in the history of India which decided with such a huge investment they have done it. But more importantly, SBI was always ahead of in terms of the technology curve. When our Honorable Prime Minister launched the Jan Dhan scheme, that was the time the chairman asked me, so this particular infrastructure, we wanted to take it to 2 billion account holder. And nobody in the world has ever thought that a single core banking infrastructure can scale, or you require infrastructure which can scale up to 2 billion account holder. We work it out, and today, let me share with you, SBI core banking infrastructure is the world's largest infrastructure running on those things with 2 billion. So always they have been ahead, and I know their transformation journey on and other things is it's ultimate class, which probably many of the global banks have not adopted.
Well, that's great endorsement coming from you here. And of course, this is a story that should be told and should repeatedly be told, because otherwise I think that there is a perception problem as well when one talks about public sector, not just public sector banks, but the public sector in general. And I think that it is fair for you to make that comment, and I think that it requires an acknowledgement of the greater public as well, that there is plenty good that also happens within public sector enterprises and particularly public sector banks. and they can be thought leaders and tech leaders in this case, as you point out. But on the manufacturing side.
Okay, so coming back to on PLI, I think one of the disruption which PLI is going to be bringing is on the semiconductor industry. While we all understand, and semiconductor is the backbone of any technology and IT adoption, starting from your IoT devices to handheld devices or to any largest data center. And that was the one place where probably India has not done well. While on technology adoption, India was always ahead. Software technology development, we were all ahead. But semiconductor is something which we are behind. And if this PLI goes the way government is trying to drive in next couple of years, India is going to be the strongest base for the semiconductor technology, starting from R&D to development to manufacturing of those things. And most of the tech company are taking the advantage. And this is one of the reasons why I was saying that this quarter, India has become #1 in terms of the manpower deployment globally, because we have moved a large number of resources in the core tech side, on the core development and R&D from the various parts of the globe to India. And we are seeing the same trend happening in the semiconductor industry and technology side. And over a period of time, we feel that this is going to really fuel the growth for next 10 years, the way we are saying. And as per the word estimate, and IMF has already made the estimation by 2026-27, India is going to be the third largest economy, global economy. And we feel that this PLI scheme, specifically in the tech side and in the semiconductor, is going to be fueling that growth.
Ashish wanted to make a point,
Just to basically buttress the point that 3 years back, if you read any newspaper coming out of London or US or magazine like Financial Times or Economist or New York Times, it was about how China's supply chain is out of this world. It is like no country can achieve it in the next 500 years type of thing, you know. The supply chain is ultimate and India is clearly way below. And in 2 years' time, and it was basically for iPhone manufacturing, that iPhone, how Apple has kind of fine-tuned everything just in time and in China, that no other country can actually do that kind of high-tech stuff. And in 2 years' time, we are manufacturing 10% of iPhones. And I was like wondering, is it PLI or is it Indians or is it all together? And for me, that is the story of manufacturing, that basically we are fed stories which were basically PR in the guise of editorials, which was to keep us think that we can't do it. Now that whatever you call it, Atmanirbhar Bharat or PLI, or finally proof of pudding in the eating, that you are doing iPhone manufacturing increasingly every day, 8 to 10% already done. For me, that is the way I say that India has broken that.
I don't know if it's fair to say that we were fed PR. The fact of the matter is that we've had the aspiration of taking manufacturing from 15% share of GDP to 20% plus share of GDP. We haven't done it in the past decade. The hope is now we're at an inflection point and we will get past that, because a lot of things have come together, including the fact that there is a move away from China. So we have to acknowledge that and put that on the table as well, which we are beneficiaries of today. So I think...
No, but the fact is that it was being projected as if it cannot be done in India at all.
Sure.
And suddenly you are doing 8-10%.
No, absolutely.
Right?
That point is taken. But Mr. Khara, let's address some of the immediate sort of issues that we will have to contend with. As I pointed out, the amendments to the insolvency code, which are still pending. And more importantly, the NARCL, the bad bank. I know that the government is also asking banks as to what the status is there and what the momentum on that is expected to be.
Well, as far as two things, when it comes to the IBC code, I would say that it has gone through the evolutionary phase. There are not many countries in the history of all these geographies where the insolvency code has got stabilized to this extent in such a duration. The other important aspect which cannot be ignored is the fact that IBC code has created the ecosystem for resolution. IBC code also has brought in discipline among the corporates. It's no more a fiction that the control of an enterprise can be lost. It's a reality. So I think these are some of the intangible gains which perhaps cannot be ignored. Having said that, I must also mention that there is a continuous effort for evolving this code. There is a continuous effort in terms of bringing in the discipline for all the professionals who are involved into this, and if at all there are any sharper practices, they are very closely reviewed by the IBBI, and the necessary remediation is also initiated. The second question relating to NARCL. NARCL, again, all said and done, it operates in an ecosystem where some of the sharper practices of the legal system are still prevalent. And those are essentially in terms of the sharper practices adopted by various players who deal with the legal system. So I think with the passage of time, there is a NARCL is also in a position to cut on those kind of time delays, and we have started seeing the traction. And also the other fact remains that there is a movement of accounts from the banks to the NARCL, and there are always issues relating to valuation.
Sure.
So these are the kind of things which take some time. But having said that, though it was a late start, but things have started moving. So I would say that in all these things, these are the newer initiatives, which always takes its own time to stabilize. But once it's stabilized, it certainly creates value. Having said that, I must also mention, it's thanks to NARCL today, perhaps when the ARCs come and quote the value is still reasonable. It's not a throwaway value. Earlier, they were trying to acquire at almost the junk value, which is not the situation anymore. So I think even NARCL has also helped in terms of a better value discovery for the lenders.
Okay. I think we've got the last few minutes, so let me try and get wrap-up comments from each of you. And Mr. Khara, I'll start by asking you and go back to my first question. Bigger and bolder, the bets that you are going to make. Your tagline says, banker to every Indian. Could that possibly change over the next 5 to 10 years?
No, we are banker to every Indian, and we have to meet the aspirations, bigger and bolder aspirations of every Indian. So that is what I feel that we should be equipped.
But bigger global aspirations?
Of course.
What could that result in?
See, today, as far as our international banking operations are concerned, they contribute about 12% of our top line as well as about 15% of the bottom line. So if at all India becomes a leading economy in the globe with about 25% of the GDP coming from the exports, perhaps we will also be matching that kind of a number. Right. So that very clearly means that we'll be meeting the aspirations of our global Indians, domestic and global Indians. We'll be local and global both.
Well, banker to global Indians, perhaps that is what the tagline will evolve to. Mr. Satsangi, big and bold bets that you see yourself making over the next 5 to 10 years as a company and also for us as a country.
Yeah. So for the company in India, let me just first answer that question, because we just finished our financial year this October, and we were all in senior leadership meeting in US, where the global 400 top senior leaders were there. To just give the perspective, the India geography was given the best performing geo for the for FY23 for the performance, and growth on all parameters. It's not only one particular segment. They take the criteria, 7-8 criteria, mid-market, SMB, enterprises, large customer, government, public sector. And most importantly, the employee satisfaction. Right. On every parameter, India has done best. So I think this is the India movement for all of us.
Well,
and
congratulations. Congratulations to you and to your team.
So, and when we look the 5-year horizon kind of thing, probably we are very bullish about the India market. Our global CEO is fully committed that we wanted India. And today, almost every product and technology which are delivered by HP globally, it touches our Bangalore or Chennai or India headquarter kind of thing. And we are further developing those things. One of the big challenge, what we are seeing, and I'm sure the many of other tech companies are saying the skill gap kind of things, and we started working. Because one side we are talking about Gen AI and all, but the skill gap, and while we have got more than 65% our youth in the range of 30, 35 year age, They are all ready. They are the best talent, but are they ready to the skill which are required for the current and for next 5 years? That's where probably HP is today focusing, that how we can ensure that the next generation of youth can be trained and reskill in the purpose so that we can consume in the tech side. And that's where we are going to be putting a lot of focus for next couple of years.
And I would imagine that that's going to be a focus of many private sector enterprises as well as the government. Ashish, milestones that you hope to clock over the next 5 years, market share, turnover, what is it that you believe you're going to be able to do?
I think in a way, NSE on many days does 45% of all trades in all exchanges put together in the world. In terms of number of trades, I think we are probably 20 times larger than New York Stock Exchange now. So that is the kind of numbers we are in. Now, how much you can go beyond? But given the fact that we have reached 8.5 crore direct investors and 5 crore households, we have now 20% women in terms of our 8.5 crore unique PAN number having investors. So we have to go higher in the number of women participating. But out this 5 crore investors, 5 crore households is around 18% of India's total households. We have to ramp up to 50%. And we have reached literally every pin code in India except 33. In next 6 months, we will be there in all the pin codes. It's like electrification. We will be marketization of India. That will be complete. At least we will be having at least one investor in all pin codes in next probably 6 months to a year max. And our aim as a frontline regulator is to provide a uninterrupted markets which are well regulated, and we shouldn't get excited. All of you should get excited on India's prospects. Thank you.
No, absolutely. There is plenty to be excited about, and maybe you can help electrify his dreams as well, Mr. Singh.
Yeah, we are here.
So what is the 5-year roadmap that you foresee?
Okay, so the first one is that I think everybody knows most of the time, even today, people say that NTPC means National Thermal Power Corporation. So we are no more a National Thermal Power Corporation.
Yes.
And we are on the journey of transforming this to a integrated energy utility. And
so a name change possibly?
Let's hold the horses for some time. So that is the larger dream. The another one is that in next 5 to 7 years, I think our fossil fuel and non-fossil fuel capacity should be almost equivalent. That's the another bigger target which we are taking. And we are quite enthused by the policies what is being taken. And like I just bring Dr. Joshi just mentioned about the DISCOM, I think in Pune. Yeah. And that's a very, very good sign. Today we are having almost 18% in the energy basket, 18% is electricity. And by 2030, if it is not going by 30%, but I think we will be around 23, 24%, 25% in that. As of now, we supply 1/4 of the electricity to the country. So maintaining that kind of market share, rather exceeding, I think that will be a kind of the challenge what we would like to take. And through that, as our tagline is, that powering nation's growth. So we will be all doing everything possible that whether it is going to, for the energy security, whatever is the most optimal solution for the country, keeping the climate change and the transition into picture.
Well, powering India's growth, powering many dreams, that's the continued mandate as far as NTPC is concerned, not just a thermal power company. He will have you know that. Mr. Acharya, the 5-year roadmap for you and for the country.
Yeah, so I think if I look at it the decade, let's say the next 7 years, I think we see India as a powerhouse of manufacturing. As the economy grows, I think there is a tremendous thrust on infrastructure and manufacturing, including the energy transition piece, which he talked about. So huge consumption of steel is going to be required for all this infrastructure, manufacturing, energy transition. And on top of that, the consumption piece is going to really grow in leaps and bounds. Why do I say that? Is because today the per capita income, let's say, is $2,500, $3,000, as we discussed, more than doubling by the end of this decade. And if the economy triples to 10 trillion, which we were discussing just a little while back, there is a huge potential for the consumption to go, which means automotive, which means housing, which means appliances, which means packaging, which means transportation, and for everything you require steel. So as far as we are concerned, we are trying to say that we become one of the premier suppliers of steel in the country. We have access, as a country we are lucky because we are able to now get the best technology available in the world to India and make world-class steel. There is no compromise, and as Ananda was rightly saying, I think we are today capable of producing the best there can be. So in terms of special steels, in terms of value-added steels, whatever you say, I think we will be in the best place there can be.
Well, that's good to hear, and the applause tells you that that's a vote of confidence as well. I'll give you the final say.
Well, I think from a service sector perspective, obviously digitization and use of AI in decision making is going to be key for us. I think in the rating industry or in any analysis, and I think the media does a tremendous job of bringing the events, at our doorstep on a real-time basis. And our job really is to be able to assess that again on a real-time basis. And over the next 5 years, we'd continue to invest in these tools, which helps the analyst decide which of these inputs to proceed upon, which one could possibly be positive, which one is negative, maybe a first cut analysis, so that we are able to react as quickly to the market. So I think that would, and in AI in some shape, Fitch has already started investing in that. I think those would possibly transform our industry.
And the country?
I think 2 or 3 things. I think the big themes that are playing out is the whole energy transformation that I think would continue. And the common theme here has been infrastructure and consumption. And that with the government's priority of getting those benefits available to everybody. I think equitable growth, I think that is something is I'm sure, everybody's wish list.
Absolutely. It's not just that we aspire for double-digit growth, but we aspire for hopefully far more inclusive and equitable growth as well, because that will truly power the dreams of more than 1 billion people in this country. Ladies and gentlemen, as is very evident from what you've heard from our eminent speakers today, there is a sense of renewed vigor, there is a sense of renewed confidence and optimism about the strength and the resilience of the India story. I also think at this point in time that what is happening geopolitically, what is happening with the world pecking order, changing, that also bodes well in many ways for India. This is an opportunity for us to leverage at this point in time, and it seems clear that we do have the capital in place, we have the appetite in place, we have the technology in place, and we certainly have the will to take this forward. So thank you very, very much. We wish you all a very happy 2024, a very happy new year to everyone and your families, and we look forward to seeing you in 2024 with bigger, bolder, better plans. Thank you very much, ladies and gentlemen, for joining us here this evening.
Thank you. That was a wonderful session and presented a lot of ideas for all of us here to really think about. But I do request all of you to stay on a bit longer so that Mr. Khara can give away a small memento. all of our panelists. Thank you, Shireen, of course. And with that, we're going to take a short 15-minute breather for some refreshments. We will be right back in just a bit.
Good evening, ladies and gentlemen. We'll resume the evening for today. I'll request you all to please be seated. A very good evening to all of you. We'll resume the evening session shortly. I'll request you all to please be seated.
Everyone be seated, please.
This is on. See now.
A very good evening to all the dignitaries. I'm sure the tea and snacks are very delicious, but the upcoming section will be more entertaining for all of you. So may I humbly request all of you to please take your seats. Amongst us is a person with distinguished abilities to be able to have a distinguishing effect on the banking as well as your personal lives. I'm sure the crispiness of the teas and the snacks will be way beyond it. May I request all the ladies and gentlemen here to please take your seats.
Welcome back, ladies and gentlemen. I know we've had already a string of interesting conversations through this evening, but it is now my pleasure to introduce our next guest for an address which is centered on a favorite. We're going to talk about cricket and the rise of brand India. So this is one that I'm sure you guys will all want to sit down for. Please be seated while I welcome on stage VVS Lakshman, former Indian cricketer. He's also been a coach, a commentator of this sport as well. Mr. Lakshman, let me please hand it over to you. All right, so we're also going to have a moderator. We'll have Ashwini Tiwari from the State Bank of India to please come on and help us with this Q&A session. I do want to warn everybody, there will please be no recordings during this session, but please do enjoy.
Yeah, good evening, everyone. Can I request everybody to settle down, please? This session will take you away from the depths or heights of economics, financial services, banking, and the India story to something which is very, very close to all of our heart. And we are very fortunate to have Mr. Lakshman with us. I had a brief conversation with him before this event and yesterday as well. And his only comment was, you can ask any question. So I wanted his comfort, but he was very kind to say any question. So I'll straight away start. He doesn't need an introduction. I mean, I'm sure that
invariably we have to choose our career path. As you rightly mentioned, my parents, both eminent doctors in Hyderabad, my father Dr. Shantaram and mother Dr. Satyabama, and they were true role models to me growing up, and I always felt that and continue to feel that medical profession is probably the noblest of professions, and I used to see, the kind of impact they used to have on their patients or the families of the patients they treated, and that used to really inspire me. And not only were they role models for me, but they were role models for a lot of aspiring young doctors in Hyderabad. Now, I was also very good in science, and my dream, the wildest dream I had.
he got 98% in class 10th.
Yeah, so I got, I stood first in state in 10th in science, and my wildest dream was to play for India and represent the country in the game of cricket, and that started when Kapil Dev and his wonderful team lifted the Prudential World Cup in 1983. But my dream and goal also was to become a doctor. And so after my 10th, I joined 11th and 12th. I took BIPC, which is Biology, Physics, and Chemistry.
Special thanks to Dr. Vivek Joshi, Secretary DFS, for giving the unique insights into policy preambles, as it is one of those rare times when concrete policy measures are being front-loaded, anchoring the vision and mission of a country on the march, with diverse agendas spanning inclusivity, tech leadership, infra-financing, and consumption boost. The corollary to these is regulatory reforms that ensure enhanced ease of business and financing of productive activities from financial intermediaries. I thank all the esteemed